Has Bitcoin officially entered a macro uptrend, and has the bull run started? These are questions we're answering in today's video. Let's dive in. Okay guys, welcome back to the channel. I hope you all having a fantastic day today. In today's video, we're going to be discussing the recent price action of Bitcoin breaking above that major $32,000 resistance. What does it mean for the macro price action? Are we in a macro uptrend? Will we still see a correction? And are we officially in a bull run? These are questions we're answering in today's video. Let's go ahead and dive in. Now, before we do, smash that like button, hit that comment button, and subscribe to the channel. We post daily videos for Bitcoin focusing on the facts, the data, the technical and structural information, and of course, the relevant economic news. No hype, no BS, no emotion, pure raw TA. If that is the kind of content you are interested in, join us on Telegram. It is the third link down below. You will get access to charts, updates, videos, educational posts, news events, and everything you need to stay in the loop of cryptocurrency with Bitcoin and the relevant economic news. If you are interested in joining our trading channel, we post trading setups for altcoins, for Bitcoin, for Ethereum, longs and shorts with exact entries, exact targets, exact stop losses, trade justification, and exclusive analysis. Not only will you get access to that group, you'll also get access to exclusive group chats, our general chat, our trading chart and education chat, our news chat, our help chat, our trade setup, and our video chat. If you're interested in getting access to all of that, go ahead and contact me in the pinned comment of the free channel to find out more. Excuse me. Today is going to be a big video and we have a whole heap to get into. We're going to go ahead and start off on the market data. As we can see for the market data, as of today, 24-hour liquidations are sitting at a total of 350 million. That is up 394% in the last 24 hours, with 24-hour volume seeing a 100% surge, sitting at a total of 163 billion. Some massive volatility, some massive amounts of price action as Bitcoin pushes right through that $32,000 monthly level of resistance, a resistance level that Bitcoin has remained under since May 2022. That is 500 days, guys. We have remained underneath this level. We'll be discussing in a lot of detail today what this means and what we should be expecting next. Needless to say, this rally was awesome to see, but it was pushed on some ETF news. We did see BlackRock spot ETF Bitcoin ETF was now listed for the NASDAQ. Obviously, they put up their ticker for Bitcoin. I'm pretty sure it's IBTC. But with that, it hasn't been approved for trading yet from the SEC. We are still unsure when it will be approved. I think the rally was, again, pushed by emotion, pushed by people FOMOing in, not wanting to be out of the market when that ETF does get approved. And we look at the recent price action and we can really take a look and say, well, the recent surge in price action over the last couple of days really has been from people jumping in and just not wanting to miss that train if the ETF gets approved. They don't want to be on the sidelines. They're massively front running this ETF approval. And we haven't got the approval yet. And again, from the SEC's statements, they don't intend on doing so as of right now. We could still see a delay. It could happen sooner, but like I always say, until it happens, it hasn't happened, so be aware of the possible risks of a denial. Let's go ahead and move over to some more data. Moving from that into our liquidation data, we saw 275 of the 350 million in liquidations come from short positions as Bitcoin exploded upwards, actually filling that 36,000 CME gap we created all the way back in May 2022. You can see that gap in the CME over here. We came up and we actually filled that gap. So filling these CME gaps could indicate potential reversals developing. So we are keeping an eye out from this point as well. Moving back over to the data, taking a look at that volatility index on the 30 and 60 day, on the 30-day period, we have now seen that surge we were looking for. As we've been hearing on the channel for the last few weeks, we're saying we would like to see that volatility index spike back up with price action to signify strength. On the 30, we have now seen that surge into volatility. And on the 60-day period, we have also seen that surge into volatility index, indicating again strength behind this price action as it breaks through that $32,000 resistance. Moving over to the traditional markets, so DXY has seen a little bit of a drop down. We are still looking for a retracement towards a 50 EMA on the DXY, provided we remain underneath this downtrending diagonal resistance. If the DXY retests at 50, we could see a bounce. However, the likely scenario is a retracement back down to 104.5. If at some point we break through this downtrending resistance, that is when we are looking for a continuation upwards to 108. While the DXY goes down, this could be perceived relatively bullish for asset prices, and we could be expecting bounces for traditional markets, and of course for Bitcoin to go higher if the DXY continues toward the downside. If, however, the DXY flips around and goes upwards, we could see the reverse occur. We do have some upcoming economic news we want to be paying attention to, primarily the Fed speech over here. This is actually happening in 2 days, and then we do have some PCE data and some personal spending data happening on the 27th, and then moving forward from there, we have a few other conferences, and of course our last one on November the 3rd, which is going to be our unemployment and NFP data. All of these are leading for inflation and could give some insights on the potential doings of the Fed for future interest rate hikes, and again the implications of those have on the market and asset prices. Looking at the S&P 500, we have actually come down and reached our target of this 4,200 range, bouncing from this level. Again, expect support to remain as support until it's not. Therefore, we expect bounces from here, provided this level does remain. If we do at some point fall below this level, that will result in a continuation lower. The same goes to the Dow Jones. We've come back down and retested that support exactly as expected. Again, expecting bounces from this level, provided this level does hold. If we do break below here, we are expecting continuations much, much lower. So definitely keep that in mind, guys. Let's go ahead and jump into Bitcoin. And I think how we're going to start today's video is discuss 32,000, discuss the monthly, discuss the weekly, move over to the daily, then move over to the short-term price action. So we'll give you a good scope. I wanted to briefly interrupt today's video to discuss the 2 exchanges we use on this channel, Bitget and BingX. So which exchange should you sign up to? If you look to the right hand side of the screen, you're going to see the list of differences in relation to KYC requirements and the countries these exchanges offer services to. The first link down below being the Bitget link, and the second link down below being the BingX link. No matter which link you sign up to, you're going to get up to 15% discounts on your trading fees, up to $5,000 in trading rewards, and of course, you'll get access to every single MegaWow exclusive bonus campaign we run on these exchanges. Alongside that, Bitget and BingX are incredibly similar. They are both ranked top 10 in terms of trading volume. They both have extensive liquidity pools and market pairs offering up to 125x leverage. And most importantly, they both offer protection funds for their users to protect you against any third-party hacks. So get started now and support the channel by clicking the links below. Thanks for listening. Before we do that, let's really go ahead and talk about the recent few months of price action. If you look at the recent few months of price action, we've seen a nice little surge toward the upside. If you've been following the channel, guys, you would have been buying Bitcoin at $18,000, okay, and $16,500. A nice proud moment. We are officially up 100% profit on those purchases, 16.5 thousand. A lot of people are saying, well, we're going to go 10K, you're going to miss the entry. You know what? Sometimes you need to focus and trust the charts, have conviction, and trade based on your validations and trade based on your analysis. And sometimes it plays out well. And in this instance, we can say we called that perfect top perfectly, and we called that bottom perfectly. So it's awesome to see. But enough of that. Let's go ahead and jump into the analysis. So one of the big questions, or one of the big statements you're going to see circulating all around Twitter for the next week, or at least today, is the bull run is back. We are back in a bull run. The macro uptrend's back. Everything's going to go to the moon. And although some of those statements have validity, and obviously Bitcoin is looking amazing, I don't want to come across mega bearish. I do want to bring you down to reality and tell you a bull run isn't something that occurs just with the prices going up. A bull run has technical validations we need to see, specific things that need to occur for a bull run to officially start. As we have been saying for months, we will very likely see a 200% rally from the bottom upwards, and the bull run will not even start yet. The bull run has a specific moment where it will start. If we take a look at prior cycles, we saw 200% in prior cycles. We saw 200% again before the bull run even began. So just the price going up isn't enough to say we are in a bull run. We're going to talk about now exactly what needs to happen for us to be in a bull run. So we look at the prior cycles. We can do it from two ways. Number one, we can look at it from the 4-year cycle perspective. This is a date range trend. All the 4-year cycle is, ignore the price action, pretend the price action doesn't exist. All the 4-year cycle is at a date range trend, meaning a ratio between date ranges on the chart on a horizontal scale. It signifies a general guideline to different phases of the 4-year cycle, a market cycle. Bear run, accumulation, bull run. It tells us on average, we see about 13 months of bear market, we see about 16 months of accumulation, and then we see about 19 months of bull market. So according to the 4-year cycle, the bull run will not technically begin until we enter that bull run phase, which is going to be positioned on April 2024. But I don't really like the 4-year cycle too much because I think there are some limitations to it, and it doesn't account for exponential growth in popularity, in perception for cryptocurrency over time. Again, we do have models that reflect this, but we're not going to get into it today. The model, or what I prefer using, is something called a trend angle, because the velocity of price action, or the angle of price action itself, is a direct reflection of the strength of price action. When you have a stronger or steeper gradient in the trend, it signifies a stronger trend. It signifies there's more volume, there's more buying, there's more momentum, there's more velocity, there's less selling. And on a higher time frame, when you have a long period of time of increased momentum, increased buying in comparison to prior periods, that is what we would call a bull run. So looking at the prior cycles, if we take the trend angle from the point of which the bull run officially started to the absolute top, and then we take the trend angle from the absolute bottom to the point of which the bull run started, we can then see a massive discrepancy between the trend angles. In the instance of 2015, the accumulation phase, we saw a trend angle of 43%. When we broke the monthly candle above the dotted trend line, which is the dead cap bounce high of the prior bull run cycle, we saw the trend angle soon to increase to 64% over the coming 19 months according to the 4-year cycle bull run phase. In the 2019 cycle, we saw a trend angle of 33%, increasing to a trend angle of 57%, moving in that 19-month period. Looking at the current cycle, if we take an expected trend angle from our bottom to the dotted trend line, we would see a 37% trend angle, and we'd be expecting a similar 50-60% trend angle, or whatever it's going to be, to that absolute top. I'm not going to go ahead and draw it out because I don't have any bull run targets and I don't want to go ahead and mislead anyone. We'll get into that as the time gets closer, but we'd expect that velocity, the angle, the trend angle to increase with that price action. So from a structural perspective, we can also validate when the bull run will start. And we can do that again by identifying key horizontal triggers. The same way you would trade a short-term chart when you're looking for breakouts on a horizontal scale is the same thing we apply to a macro chart when we're looking on the macro scale. If we take a look at the prior cycles, we saw a macro uptrend develop when the monthly candle closed above that horizontal solid trend line. The macro uptrend then resulted in a push toward the dotted trend line where we saw a rejection, and then finally we broke through that dotted trend line, resulting in the bull run. We saw the bull run start. Okay, moving over, we saw a monthly close above the horizontal trend line, resulting in a nice strong rally towards the dotted trend line, forming this double top. We saw a rejection and we came back up and officially broke through it, resulting in a bull run. In this instance, we've seen the breakdown from the horizontal trend line, we've seen the retest, we are now looking for that breakout. So is Bitcoin in a macro uptrend right now? The answer is no. We need to see a monthly candle close above 32,000 to result in Bitcoin entering a macro uptrend. If we get that monthly candle close in 8 days, Bitcoin will be in a macro uptrend, which will result in a continuation to the dotted trend line as per the prior market patterns, which will result in a price of around 48,000. We then will see a rejection or expected rejection before an eventual break back above. And when we see that break back above, that is when we will enter a bull run. And again, this is all according to what we have seen in the past. These are prior examples of prior cycles that we have seen the same pattern play out. Now, the pattern may vary this time around. We might see this breakout happen sooner. We might see it happen later. We might see, and we might not even see a rejection from 48K if we reach it. We might just go straight through it. There's plenty of factors that could impact the way of which this price action plays out. But the core essence of what a bull run is remains. To expect a bull run to start when interest rates have not pivoted, to expect a bull run to start when these key levels or these trigger levels on the chart on the macro scale haven't broken is a little bit, I would say, ambitious. We are in a uptrend. We are definitely in a weekly uptrend. We are moving into a macro uptrend, but we're not quite yet in a bull run. I think we need to bring everyone back to reality and make sure you're objectively aware. And that doesn't mean you shouldn't have Bitcoin. Like we said, we bought Bitcoin all the way down at 16.5K. I'm telling you right now, we're not in a macro uptrend, but we still bought Bitcoin down over here because you don't have to be in a macro uptrend to start buying Bitcoin. You're looking for reversals, right? You're buying at points of reversals to start accumulate. You're buying at lows to accumulate. So let's go now to the weekly and fortnightly chart and discuss. From the fortnightly chart, the 2-week chart, we can see Bitcoin has entered the Gaussian channel. And we do have, like I said, about 7 days, 8 days until this 14-day period, this monthly candle closes out. And as much as we do need to break above 32,000, a very important level we need to break above to and hold above is going to be 30,000, which is a Gaussian channel midline. We can see generally when we enter the Gaussian channel, which is this entry point, that signifies a shift from a downtrend into a uptrend, okay? And when we break through the midline, that signifies a shift from a weak uptrend to a strong uptrend, and that strength only starts to increase as the price goes through. In fact, when we see a break of the midline, we generally travel through the channel, whether it be a break from the top side in or whether it be a break from the bottom side up. So if we do get that fortnightly close above 30,000, which is actually very likely, we are quite likely to continue upwards on a higher time frame, pushing towards that 48, potentially 46,000 target on the macro scale. Now, this is going to happen overnight. This is not something that's going to wake up and you're just going to see Bitcoin at 48K, right? It's not going to happen. We've seen a lot of volatility in the last few weeks. Thousands of dollars moved in minutes. It's very unlikely we'll see it again. It's not a common occurrence of Bitcoin, right? This kind of price action is not a common thing. It's quite an abnormal thing to occur. It's very perpetuated by emotion, by hype, by fear of missing out, by news events, okay? It's not something we should expect Bitcoin to behave like going forward in the future. If it happens, it happens, but I wouldn't hold out for massive volatility like that, okay? But what I'm trying to say is if we do break above here, we have that strength. Moving over to the weekly chart, we are seeing a lot of strength in the weekly, right? We've seen a few things. We've seen the break over the Gaussian channel upper band, which was a signal of strength, a signal of that weekly trend being reclaimed. And of course, now on the daily, we're seeing a break over that $32,000 level, which we'll come back and discuss in a second. But another really important thing I want to discuss on the weekly chart is a trigger on the RSI. And this trigger is going to be the 32.09 on the RSI. Now, if you've been following the channel for a long time, you would know I'm a momentum trader. I trade primarily based on momentum. I try to focus on reversals, not continuations. That is why I'm so much better at picking reversals than I am at catching continuations. My entire trading strategy for the last 8 years has been centered around reversal trading. So when we're looking at the RSI here, we can see a very important thing that is starting to develop, and that is a shift in the RSI. We are looking at this 62.09 point. If we get the weekly RSI to close above 62.09, the probability for a continuation upwards significantly increases. You're probably thinking, why the hell is a 62.09 even in this video? Well, let's take a look at the last times we closed above. We'll go ahead and draw an arrow in every single time we close from the bottom side up and break above that 62.09 on the RSI. I'm going to show you how accurate it has been in predicting pretty large time frame moves of 10% plus on Bitcoin. So let's go back to 2019. I think that's good. We can go further back if you want to. On your own time, you can go ahead and take a look. It has been very, very accurate. If we take a look every single time we get a weekly close, has to be from the bottom side first, and then a break up. We see a large move for Bitcoin. In this instance, we saw 130%. In this instance, we saw 26%. In this instance, we saw, of course, basically that entire bull run occur, right? In this instance over here, we saw a nice little jump of 20%. In this instance over here, we saw again a nice little jump of 25%. And of course, in our most recent instance, we saw a little bit of a jump of about 10%. So you can see in history, as we have that momentum shift on the high time frame, momentum drives price. It's a leading indicator. We generally see the price eventually follow through. So it's definitely something we are watching out for in that weekly close. Now, let's talk about the more somber thing, which is until we break and get above resistance officially, resistance is a resistance until it is not. So we are looking for a monthly candle close above 32,000 to really nail that nail in the coffin and say, well, we have officially closed above 32,000. We are now officially in a macro uptrend, and 32,000 is officially a support. Until that happens, there is a potential for a rejection. We'll talk about the short term, but from this perspective on the daily chart, we are looking good. Let's just assume this candle's closed. We're looking fantastic. We have this whole range over here, right? This whole range of price action. We are very likely to feel. Where is that next resistance? It is up over here at 46 to 48,000. That matches up with our monthly target, of course, on the monthly chart of that dotted trend line of 48,000. If we do take a look at the VRPV again on this chart, we can see, I'm going to go back to this chart, we can see the VRPV starts to slightly increase a little bit here until around 40, and after 40, it starts decreasing. So we are going to have a little bit of a harder time pushing from 32 to 40 than we will pushing from 40 to 48, okay? So don't expect this move to be massive and volatile. If it happens, it happens, but I don't expect it to happen. I think that'll be quite an unlikely scenario unless we get more ETF news, because ETF news seems to be pushing the price up like a madman. So if we do see that, expect volatility. But all in all, if we just see nice steady price action, I wouldn't expect this range to be eaten up relatively quickly. In fact, like I said, I'd expect greater volatility above 40,000 than I expect from 30,000 to 40,000, okay? Now, if we do see a monthly candle underneath 32,000, that will confirm this was a fake out. And of course, with these horizontal ranges, we can sometimes see deviation toward the top side before a correction back toward the downside. Now, we've seen this happen numerous times on a smaller time frame. On a higher time frame, it is slightly less likely, but it is still something we should be looking out for. So once again, I'll say it again, if we do see a monthly candle close underneath 32,000, that will delay the monthly breakout and could result in a rejection back down. The uptrend we are still in remains. This is still going to be that uptrend, okay? This black horizontal trend line is still the uptrend, and therefore we are in a trend, a uptrend. This is our trend angle, right? We are in a uptrend while the price remains above this level. So don't expect the price to permanently go up. We could definitely see retracements toward this level, but again, guys, if we get that monthly candle close, it is just looking even more bullish. I would also like to say, if the ETF gets declined at any point, this entire chart is going to tumble, because if we look at this entire rally here, this 10%, 12% rally, whatever it's been, okay, it's all been built up on the notion that the ETF will be approved. And if it doesn't get approved, it's not going to be very pretty for Bitcoin, okay? So definitely keep that in mind. Let's go to the short-term chart. It does look like we have a megaphone pattern building over here. And now a megaphone pattern isn't a pattern I use much. It's actually not a very common pattern. It's like this symmetrical triangle that's expanding outwards, right? With expansion as the triangle develops. It is a bullish pattern, okay? So with this being said, if we do drop back below this trend line and close under it, that would invalidate it. It would have to remain above this trend line to continue upwards. That would be bullish, okay? So we do see a drop back below this level. Again, that could potentially be a rejection. Again, this lower level is sitting around 32,000. So we do lose that 32,000, it will invalidate the structure and the price could tumble back towards that uptrending support line. Another thing to be watching out for. And last thing, again, that CME gap has been filled. So if we do see a rejection, it is likely going to be from this point. If we do come up and eat that level again, it's a very high chance we continue through this level. So all in all, Bitcoin is looking good. okay? Bitcoin's looking good. It's been looking good for a long time. On the macro chart, we've been looking good ever since over here, okay? On the short term, we've had moments where we've looked bearish, okay? We've seen rejections. Some of these rejections didn't really go through. We've had that major 25.2K support, which we built support from and continued upwards. But all in all, on a macro chart, Bitcoin is still looking good. And I definitely wouldn't be selling my Bitcoin, or if you're still holding spot Bitcoin, I wouldn't even bother selling it at the moment, provided 25.2K holds. If 25.2K is lost, then we see that continuation lower. Until then, I think it's looking relatively good. Now, if you are not already in Bitcoin, I wouldn't be FOMOing the hell in. I wouldn't do it. I would be waiting for that monthly candle close. And I'm not going to sit here and advise you what to do. I've given my suggestions. I get a lot of people ask me, why, when should I buy? I told everyone when you should buy. I made countless videos on it for months. For months, we were telling you guys 16,000, 18,000, leading up to it for months. Okay, all over Twitter, all over YouTube, all over Telegram. I'm not going to go ahead and make a new suggestion whenever I made my suggestions. I gave you my opinion. I said it. If you missed it, that's okay. If you weren't following at the time, that's just unfortunate. It is what it is. But I'm not going to say a new one because I don't want to go ahead and mislead anyone so high. So if you want to buy Bitcoin, my suggestion would be wait until the monthly. It's only 5 days or 6 days. Just wait a little bit. It's not going to make the biggest dent in your pocket, okay? Then, if you really want to buy Bitcoin, you have to make that decision on your own. Can you afford it? How long are you going to hold it for? What's your time horizon? Are you putting more in than you can afford to lose? There's things you have to consider as an investor that you need to make according to your own risk tolerance and your own decision making. Personally, I will be looking to buy some altcoins if Bitcoin closes a monthly above. Altcoins are very much still in accumulation. They are very, very low compared to Bitcoin. I think altcoins have a good chance of doing very, very well if Bitcoin does continue upwards and close above 32,000. I think keep your eye on that. Anyway, guys, I'm going to leave the video there. Thanks for watching. Just be cautious going into the monthly candle close. Everything's looking very, very bullish. Everything's very, very good. But we still have that final and most important hurdle we need to break above, which is 32,000. Don't let Twitter mislead you. Don't let Twitter make you feel like you're missing out on the market, okay? You're not. The market's going to be here tomorrow. You wake up, you'll go to sleep, you'll go away for a week, you'll come back, the market will still be here. Whether you buy Bitcoin now or in a week's time, it's not going to make a big difference in your financial life. Think about that for a second. Unless you're investing millions, buying 2 or 3% higher is going to make no difference. So don't cost yourself the stress and anxiety and the emotional turmoil of panicking over a few percent. It's not going to make a big difference. Your biggest profits will come in a bull run when altcoins perform massively. That is when the big profits come. No one is going to get rich from Bitcoin unless you have millions and millions to put into it. And even then, you probably won't make too much unless you caught the exact bottom. Okay? Stay real, stay objective, trust the charts, not people. Thanks for watching. See you in the next one. Cheers.